Elbaite is a secure Bitcoin exchange based in Australia. And today we're going to dive into their journey and also get some lessons from them. So welcome to the show, Morty and Samira.
Good to be here.
We met each other during the heart of Melbourne's lockdown. So it's just a very familiar setting where we're all online only. It's funny.
It's come full circle. Yeah. So why don't you tell us how this all started? How did Elbaite, where did the idea come from?
Yeah. So actually it is Morty's story that I just jumped on the train with. But I'll say it anyways. And so we're actually one of the earlier exchanges out of Australia. So we started out in 2017. That's when we established the business. And so the story behind that is that Morty had actually started his crypto journey back in 2013. Started out as a crypto miner. And when you're mining Bitcoin specifically, you want to get Australian dollars back for it. So what do you use? You use a crypto exchange. And so through his trials and tribulations with using all of those crypto exchanges that were available back then, they were very unsophisticated, right? So there was a lot of scams around. And so for all of that Bitcoin that he was able to mine, he wasn't able to actually get much return in dollar value because of all of the tragedy around it all. So the exchanges would get hacked, and whose crypto gets stolen? It's the user. And so that's where the idea started. It's really like this vital service within the cryptocurrency industry. We need to make it more sophisticated. And so that's when Elbaite started out. Morty reached out to me, his sibling that knew how to code, and was saying, hey, I've got this business idea. Do you reckon you can create this with me? And that's when I was like, absolutely, Bitcoin sounds amazing. And that's a short around it. So we can leave it there for now.
I might add though, to Samira's credit, she was aware of blockchain at the time and she was an electrical engineer. So the fit was perfect, right? You have a commercial business sort of person thinking about a business plan. And then on the other side, you need somebody that can actually understand both code, but also the engineering aspects, does it need this or that? And so in a way, it was just a perfect fit from what we brought to the table.
Yeah. Excellent. So how did you decide what to build and how to build it? You have complementary skills. How did you decide what was your first version, and what was your first version of your product? What could it do?
Well, it did one thing and one thing really, really well. So in a way, that's sort of a advice I give to other startups as well is, sort of focus on your superpower, your superhero product, the thing that does it and does it well and does it better than anybody else. And so what we developed was specifically going around the whole, security aspect around crypto exchanges. So really the first product that we launched was we designed one of the world's, first and probably, very unique model in how Bitcoin can go from one person to another person in a very secure fashion. And at that time, we called it a non-custodial exchange, in that the crypto exchange never held the Bitcoin. To this day, we've expanded far more and we've got, a whole range of other products for different types of users. At that time, it was that product. It was unique in the market. It was world first. And we did it well, and we did it better than anybody else. And it did well. Like, it started out very quiet, too quiet, many weeks where you sort of just get one user a day. And even that was a big event. You go, whoa, somebody signed up, or look, one person's buying, $50 worth. And from there, it just sort of exploded in popularity and growth.
Yeah. I have two questions there. One is when I work with startups, especially in tech, they talk about having to raise money before they can begin, or there's a few self-limiting beliefs, like it's so much to tackle. Did you have to raise money for your first version of your product? And if so, how did you?
It's the MVP one, the sort of the one where, it sort of kind of works. That was all raised with influence. So there was a sort of wasn't a whole lot of money, at least for the people involved. It was a big money from that perspective, but the amount of money raised, she showed compared to VC checks and stuff. It's ultra immense. But, when you work on a very small budget, I think it gives you a bit of a superpower as well. You to the point where you can do a lot with very, very little. And so the amount we raised, we not only built the product, it was our marketing budget, it was our PR budget, it was our tech budget, it was all the budget we had. After the MVP, there was like an angel round. We just sort of needed a little bit to top it up. But actually, what we were seeking, some expertise around PR, around the commercial side, legal side. Well, one way to do so would be, let's see if we can find that sort of expertise, in a way, get them aligned with the business. And so we searched for angel investors as opposed to VCs. VCs tend to experience and other sort of colleagues in the very beginning, they look, they can be hands-on, but they're less hands-on than an angel investor. The angel investors that we brought on, were more than happy to do not only more introductions, but sit down with us, learn the product, give us free legal help, free commercial help, free compliance assistance. And it was the actual help and assistance that they gave was worth more than the actual check they wrote. And that was another thing that really benefited us as well. And I might say, who remembers this, it wasn't easy. And we did a lot of pitching videos, sure you remember, like the amount of pitching videos, to record stuff. It was hell of fun, but really stressing as well, I might say.
Yeah. Yeah. I mean, there's a lot to comment on about our fundraising journey. I do want to add here that, at the starting point, from the day zero, it's not that we were saying, okay, we need money and we're going to spend money on everything, right? It's, we had a set of skills that, we can be free resources. So we didn't need and felt like we need to spend money on every aspect. That was our main goal, is to be really capital efficient. And so, yeah, I mean, that's what I wanted to mention here, that yes, we did capital raise at the very early days, but it wasn't for the, just to give ourselves a wage. It was, we were very passionate about this project to see it through. And we were looking at what exactly do we have to pay money. For us, it was that legal fees, especially it was to climate or with cryptocurrency in Australia back when we started, there were new laws coming out, new regulations coming out. So we couldn't get away with doing the legal for free. We had to spend quite a lot of money and quite a lot of the budget on the legal fees side of it. So there are some costs that you need to go, what's absolutely critical that we need to launch.
Yeah. Yeah. I don't think, I don't think we took a wage for, like the first 3 or 4 years. I mean, it does come from, two things. A, we were both young, so we didn't have, debt. We didn't have a family of our own, like children. I do, that might not be possible for everybody. And it's certainly not possible for me to do that again at the age that we are. But at that time, we were, 23, 24, in our similar early 20s. So you can't afford to eat tuna cans every night. And, so, but, we didn't take a wage or a salary for a very long time. And a lot of that came from, we wanted this business to succeed, and we were only willing to spend on things that mattered.
Do you think the landscape has changed, that the approach you would take if you were 24 now be different with going to friends and family and then angel investors? Would you do it differently? And would your advice be for startups now to follow a similar path or a different one because things have changed?
Yeah. If this was 2-3 years ago, where, at the height of COVID, I think VCs were writing checks quite easily, and for any any idea under the sun. But these days, even VCs have had to tighten their belts. Angel investors want now a very clear runway to commercialization and break even. Running a business at a loss or without a clear plan to profitability, it's very difficult to raise, if there's no plan for that. And my advice would be right now, start out extremely small, prove one thing at a time. But the first thing to prove would be, is there just one person that would be willing to pay for this? Just one. Like, you don't need to say, is there a million people? Is there just one person that is willing, and then finding that one person in the lowest, cheapest possible? And it could be literally, I'm not talking about an automated fashion. You could just pick up the phone and call, if it's a B2B, just call a few businesses that might be interested in that. And so I would, in summary, I would say start small, have a very clear plan to profitability and commercialization. And once you've figured that part, then and only then go and start speaking with VCs or angel investors. Because if you go too early, you're going to end up spending a lot of time speaking and raising and pitching and all of that and get no results, where you could have spent it on, getting customers and doing self-marketing, etc.
Yeah, that's a great segue. Go on.
Well, I wanted to add on the Australian landscape, because that's really important. So we are an Australian company from the get-go. We still are a 100% Australian company. So me thinking back about the investment landscape back when we started 8 years ago now, the whole concept of a startup didn't really exist. I mean, it's really a reason why I moved from Brisbane to Melbourne, because the concept was starting to bubble up in Melbourne. So early stage concepts, none of that was really fully developed. Now we have really healthy ecosystems, I think, especially at the early stage. I'm seeing so many more early stage VCs pop up everywhere. There are events everywhere, really focused on ideas and with funding backed into it. So yeah, I think the Australian landscape is starting to warm up to the concept of not small business, but startups that are trying to, be big and global.
Yeah. On focusing and building your company and generating revenue, how did you acquire your customers at the beginning? It's something I get asked a lot, is go-to-market strategy and launching your products. How did you attract your first set of customers?
At the beginning, it was primarily just getting out there. You launched a website, you launched a platform, then you learn a little bit about SEO and SEM, and you go, and nobody's visited yet. Then you dip your toes in various ad platforms, Meta, at that time, Facebook, Reddit, etc. And, the quality of the traffic wasn't that great. People were sort of coming in, bouncing back. So all of that, what it helped us though was just refine and make the landing page a bit nicer. I can change maybe the content a bit more until one person did something. Then from that one person, it sort of grew, it was, as I was sort of saying earlier, it was really slow in the beginning. For the first 6 months, I think we had only like 2 or 3 people sign up per month. It was literally, you'd go days without sales, but you would continually refine. It was refine. And we even told those team that signed up, told them to get feedback. Why didn't you sign up? What did you find painful? What was good? What was bad? And really, I think the breakaway point for us was when we sort of introduced a referral program, and that word of mouth from there did more than our budgets on Facebook. And I would say, actually, there is some history, because you remember, Ray, at that time, we were talking to you about, hey, we've got this sort of, issue and stuff. And it was actually yourself that said, what if you sort of create some sort of referral program? And So there's some shared history between us, but that was really the breakaway moment. Right, was the word of mouth was what kept us going. One customer became two became four, etc. And that was really the inflection we saw.
Mm.
I'm glad that my advice helped you in your inflection point.
So it was really important, really crucial. We had a conversation back then.
Yeah. I'm really glad it worked out. And fast forward to now, tell me more about what exciting things you're working on. What's your latest product and features, and what problem are you solving now?
Yeah, I can speak on that one because it is something that I've been working on with the team for like very closely with so we've made a dramatic product change, a dramatic product addition, actually, I should say. So we've been in the world of non-custodial crypto exchange for the past 7 years, and it was fantastic. But that market, it's a very specific market that can really understand it. And that's, it's somebody's third, fourth exchange, and they're ready to hold their own crypto in their own custody. And so the pool of customers is naturally smaller. And then we're on the other side, we're thinking about, because we're a crypto exchange, we've got experience and full knowledge around all of the custody options that are available. We've been looking at it for a long time, especially for our OTC that we've been looking to expand. So we've been highly researched and highly knowledgeable about custody in general. So what we brought out and launched at the start of this year was our Elbaite vaults. And so what this is our answer on how an exchange can do client custody really well in a very secure way. So what's unique about our Elbaite vaults is that these are separate, segregated wallets per client. And I know that sounds really simple and something that we should all expect of a crypto exchange, but the truth around how rapidly cryptocurrency exchanges have grown, they've really gone outside of this segregated wallet model into shared wallets for a number of their clients. And so we want to bring it back to the basics and offer this for our Australian clients because we do want to keep on promoting good practices. And so that's what our Elbaite Vault is all about. So it's giving people an option who are not wanting to custody the crypto on their own. It is hard, right? With our knowledge of all of the wallet technology that's out there, it's still not super accessible for the everyday average person, for the everyday average Australian, right? That is keen on investing, but they don't want to deal with managing this 12 seed word. It's just such a strange, different concept for somebody to wrap their head around. And so we understand that. Yeah. And so, that's why we created our vaults.
So I know many people who then ask me, am I a crypto guy? And I never say yes to that question because it's a small portion of my life, but because of you two, it's a part of my life. I wouldn't have spent time learning more about how wallets work, whether they're digital wallets or they're physical wallets, and how exchange works and non-custodial without our engagement. How does someone get started? What advice do you have for those people interested getting into Bitcoin and other cryptocurrency and investing when there's so much material out there? And if they want to use your product, how does someone become a customer, and how do they go from not knowing anything to being able to hold their first partial or full coins?
Yeah, when you're speaking about the zero knowledge around cryptocurrency, you just start with the basics, right? So some of the most common questions that somebody asks me, and I'll focus more on the females that approach me. So I am kind of seen as an approachable female in the crypto space that they can feel comfortable enough to ask the super basic questions. And so some of the most common questions that I do get asked by women predominantly is, how much money do I need to start if I do want to invest in crypto? The answer to that is as little as $20. Yes. And this is, it's not just women now, but if somebody doesn't have experience with even just the share market, maybe that concept is also new to them. So there's different buckets of zero knowledge. So do you have prior knowledge on share markets? Do you, or are you new to both? So yeah, there are different types of questions that a lot of people tend to ask initially. And what did you want to ask?
I don't commend.
Well, I might add, everything in here is general in nature, not financial advice. So with that disclaimer,
Because I just threw off it.
yeah,
It's a classic Ray disclaimer.
yeah. I mean, look, it is an important one because somebody who's stuck in the crypto or the Bitcoin world at that time, it is important to ask yourself actually one question is, A, can I afford to invest? Right? You start from there is like, can I afford to invest? And, simply if all your money needs to go into rent or, mortgage repayments, food, shelter, your safety, those are the things you've got to cover your basics here. Your Maslow hierarchy of needs, right? So if you've covered those off, then you can start to go one rung above, right? Like, how can I continue to, or how can I save for my future? Whether it's saving for my retirement or saving for a specific item or thing or holiday, car, etc. And so that's all different between, everybody in their personal circumstances. But starting out in crypto is merely, there's a couple of reasons why I chose at that time to invest into Bitcoin. The first was that I had no debt at that time, right? I mean, I still don't, but big advocate of don't go into debt. But at that time, yeah, look, I'm in, but at that time, I think I was, what was I? I think I was like 17, 18 years old. And from my understanding this was a technology that would have a profound effect on the world. And at the same time, it's a use case of a global digital currency would have enormous benefits for the world. So I sort of said, well, look, I want to work in this industry. I want to learn more about this industry. And I didn't necessarily set up a crypto exchange when I first got into it. I just wanted to be part of it, right? I actually wanted to be something in computer hardware. I ended up being an accountant, my life goes into tangents. To start out, you really have to meet your Maslow needs first. And then from there, starting out, I said $20, shameless plug, go on Elbaite, and we'll get you started, in under five minutes. But just start with an Australian sort of service thing first, a little bit of money just to learn. It shouldn't be something that, is a big amount to you. You just want to sort of learn, just want to dabble. And then from there, you can sort of go, what are the areas of interest? Like, what do I want to learn more? Do I want to learn the technology first? Do I want to learn the economics of it first? Or is this simply just a way for me to diversify my portfolio? Because one might already have shares, property, and all manner of stuff. And you think, maybe this could act as a good diversification for that portfolio, maybe adding 1 to 2%. And, modern portfolio theory goes, depending on your risk appetite, you want some low risk assets, you want some medium risk assets, and you want just a little bit of high risk assets. And why do you want or need some high risk assets? I mean, for some people, you don't want any. So if you're close to retirement age, stick to low risk. It's generally what's sort of taught. But most portfolios, a little bit of risk, you can sort of use maths and finance stuff. Generally, it sort of goes by adding a tiny bit of risk. Yes, there is a chance that just based on principles that it is a bit more volatile, that there's a chance of losing that. But at the same time, because it's such a small part of the portfolio overall, the net effect on the portfolio is very minimal. So, but the reward for adding a tiny bit of risk is far outweighed by the risk itself. So you can actually look at the beta of your overall portfolio. And if I'm going sort of too much into the finance, as I was sort of alluding to before, right? It's really what interests you in this. So by just starting with a small amount, you can sort of go, which part of crypto or Bitcoin or blockchain do I want to learn? And you follow that path.
I think for the people I talk to, it's the mechanics. For example, like I used to work in online brokerage, and then I'd have to explain to them, you need to open a brokerage account. You need some identification to verify your identity, and then you need to fund it with the bank transfer. And then you need to pick the instrument that you want to purchase and then teach them about how instruments settle. In crypto, even for me, who's worked in like financial markets since like 2007, it still took some time to understand the mechanics and the terminology are different. So what are the basics that you think a beginner person who wants to learn about the mechanisms to get started, and they have the $20, like, should they like, what are the players in the market? Should they choose a physical wallet? Should they have a digital one? What information do they need? Do they need to submit a whole bunch of other documents and things? How do they keep it simple on their first run to play around, to learn about the platforms? What do you guys say to them?
No, but do you want to stick to something Australian? And I say that because we're right here in Australia. It doesn't have to be us, but stick to an Australian service provider. You can be sure then that they're at least following, laws, there's some protections, the people are here, possibly you get better customer service. But you want to stick to an Australian service here. The second I would say is, if you're starting with small, I would just stick to the Elbaite vaults, an example. You don't need to dabble into hardware wallet or a self-custody sort of wallet or solution in the beginning with a small amount. It is, though, one of blockchain's key pillars, is the self-custody aspect of it. You have to do it in the beginning. It is one of its superpowers that isn't possible with other types of currencies like the Australian dollar. You can't self-custody Australian dollars. The closest thing to self-custodying Australian dollars would be physical cash in your wallet. In a digital form, it's usually with, Commonwealth Bank, etc. Now with Bitcoin, you can have it on your phone or in the paper wallet. The trouble with that is, if you don't clearly understand it is that you might misplace the private key. You might lose that private key. Somebody else might gain access to your phone or the private key. And those are the dangers when starting out, is when you try to do it yourself all at once, support that can be provided if it's self-custody. So you can't call Bitcoin Corporation and ask for customer support. There is no Bitcoin Corporation, right? So if you misplace those keys, it's very hard to get them back. But if you start with an Australian exchange like Elbaite, use those vaults, the crypto security there, it's managed, segregated. And when you're ready to go to that next step, when you educate yourself, then we can help you sort of move on to those next steps.
Okay, great. I have a couple more questions. I have so many questions whenever I catch up with you guys. Before I forget, I want to hear both of your views on Bitcoin moving forward. Are you bullish? Are you bearish? Is it an inflation hedge in a time of high inflation? Obviously, these are your personal opinions only, and everyone should seek professional financial advice before making any decisions. But I would love to hear your views, since both of you are in this space much deeper than I am. So Samira, why don't you go first? Tell me your view on Bitcoin specifically, and then the broader cryptocurrencies and your view on the future with them.
Yeah, I'd love to. So, and there are different reasons why people are interested in cryptocurrency. So I just want to acknowledge that there is such a huge philosophical side around cryptocurrency and its origins. For me, that's where my pull is. So, and that's where it's always been. As the world has become more challenging politically wise, I think it's always really important to think about, when disaster does strike, what vehicles, what options do you have to protect yourself financially? Finances will get you access to a safety I can understand for the average Australian, this kind of talk is not something that we consider every day, right? We live in an amazing country. We're so privileged. We have safety. Our political system has been really quite boring, compared to politics globally, right? So boring is safe and it's great. So we have benefited a lot from that. And so, yeah, for me, just the philosophical side of what cryptocurrency can give you, I will always be supporting what Bitcoin and cryptocurrencies like Bitcoin offer. So yeah, I'm bullish, definitely.
Okay, Morty.
But I mean, it's very obvious. I mean, I'm extremely bullish. If I wasn't sure to be, in this industry still, to Samira's point, some are in it specifically just for the short term sort of gains. I believe Bitcoin and blockchain transcends a lot of the short term thinking here, and really you want to be putting on your long term hat. As what Samira was alluding to, a lot of other countries, and some of these were considered first world countries, right? Like you look at Turkey, you look at Argentina, you look at, some countries, that are during in other parts of the world. I mean, even in the West, inflation got high, not as high as 100% as what they saw in Argentina and, 80% in there. So there is a need in the global world, and we have to sort of at least take off our just Australian hat for a moment and think globally here. There is a need globally for a stable financial currency that's accessible to the very lowest rungs of society. And the US dollar has served the global world really well for a lot of things, business, shipping, banking, finance. The US dollar has provided that stability, but at the lowest rungs, if we're talking about the entrepreneur that wants to do global business in India, in South America, them, those sort of platforms are inaccessible. I mean, consider the fact that if you are a content creator, you can be paid in Australian dollars. Well, what if the platform doesn't support the currency of your whole country? So you don't have access to that earning potential at all. You're cut off. You're cut off before you can even sort of start. There is that need, and that's why I'm bullish. I think there's a global need of that sort of stable currency that can be accessed by all.
Okay, great. I'm not surprised by your answers. I'll ask you your final question for our podcast, which is, in your journey so far at Elbaite, for both of you, what is the most important lesson that you learned? And what advice do you have for others in their journey? We'll start with you, Samira.
Being a startup founder absolutely is difficult. Cool, great. Like, I hate that sentence, by the way. Like, it's so whatever, because you can just look at all of the scary stats, all of the scary road ahead of you, and you can even be a bit arrogant on that. Oh, I've taken a difficult path, but so what? You need to be focused on what you're trying to create here, and that needs to really matter to you. So if the project and the impact that you're trying to create is not meaningful to you, I don't think it's easy to survive the brutal road ahead of you, right? It's plain and simple. It is brutal, but it has to matter to you outside of the brutality of it. That's my advice. Make sure you pick a project that will be worth it for you in the end. So 10 years down, if you drain 10 years of your life, are you going to be really proud of everything that you've achieved in those 10 years? You have to think like that, I think.
Yeah.
Great. Morty.
Yeah, I was going to say something very similar, but maybe to mix things up a little bit, my second advice is, start with yourself. At times they can be very helpful. If you can create a product that you would use, you sort of found a product market fit because at least you started with yourself. Like, you'd go, would I actually use it? Would I pay for this? If I wasn't the founder of this product, would I hand over money to use this product? And you might even have critical feedback yourself. Maybe it's a bit slow, it's a bit clunky, but ultimately you can start with a problem that you have got. You get great insight to how the solution should be as well. Now, if you don't start from there, that's okay. The next thing would be you start with a problem that you know exists. So if you start with the problem that you know exists, finding a solution tends to be a lot easier as well. I do see a lot of people finding a solution and then going, what problem can this be fit into? And that generally doesn't work out well. You're sort of looking, who's got a problem? Who's got a problem for my solution? Right? It's a lot harder to solve that puzzle. So that's where I would say for startup founders, honestly, as sort of Sarah said, if there's just something you've got to have passion for and see yourself doing it for the next 5 to 10 years. If you think too short, you might end up going down the wrong path. I will say though, I have seen people do not, well, small businesses that are sustainable for themselves. And I'll give you a case in point, right? A VC is not interested in making a profit of a small business earning $2,000 a year. Perfect, right? And you could build one of those and it's sustainable and you're not having to deal with a large board. That's something that I think can be just as powerful down. And to be honest, sometimes probably even more profitable. There are at times where you see the business gets sold and the founders end up walking away with very little because they've just been diluted to like 5% ownership. I would rather have 100% of a really, really small part than a tiny slice and no say, or a really large pie. A lot of times that little small pie is in worthiness bigger than tiny slice.
Well, thanks, Morty and Samira, for being on Founders and Funders.
Thank you, Ray.
Yeah.
To be here.